Hello, everyone, and welcome to the Monday Open. My name is Ollie, and today I'll be representing the Vantage Private Client Group for the Monday Open. So shifting into the agenda for this week, we'll start off with the events of last week, where we'll be focusing on any of the major events from last week, including the major market-moving headlines, putting a bit of analysis on those and analysing how did the prices react. We'll then shift into the week ahead section where we'll look at some of the key events which are coming up this week and doing a little bit of speculation in terms of where we think the prices will go to from there. We'll then shift into the technical corner where we'll take a spotlight on a couple different markets and look into them using a top-down analysis using our technical indicators. Lastly, we'll shift into the Q&A section where I'll answer some of the most commonly asked questions from our clients. So to start off with the events of last week, starting off with the PMI data. Last week, towards the start of the week, we did have PMI data coming out of Europe as well as in the US. So starting off with Europe, Germany's PMI data came out firmer than expected, while the French data came out softer than expected. From a holistic view for the Eurozone, it ended up coming back as expected. So for this data, for the Euro, we'll take a look on how that one reacted. So on the day that the PMI was released, the Euro did gain 0.48% against the US dollar. But if we're looking at from the weekly, we actually did hit multi-year highs, reaching its highest price since late 2021. Week on week, it gained 1.73% against the USD, which was its largest weekly gain since April. For many of us, we would know that as the week following Liberation Day. In terms of price movements against other major currencies, the euro did weaken against the pound, which we will touch on next. And it did gain against the Aussie, up 0.46%, and against the loonie, up 1.39%. Shifting over to the UK PMI data, this came in firmer than expected, and as a result, we did see a firmer pound closing week on week up against all major currencies. Particularly, there was big moves found against the US dollar, which did gain 2.04% week on week. And as I said, in terms of the other currencies, it did still make big moves as well. Lastly, for the PMI data, we did have PMI coming out of the US. However, I won't focus on that one too much. I'll touch on US inflation a bit later into this section, looking at the core PCE. Next on, we had the Aussie CPI data, which did come out weaker than expected. So for this one, we'll be looking at how did this impact on the Aussie. So as we know that the CPI data is the main gauge for inflation here in Australia, and this did lead to some mixed results for the Aussie against major currencies. Losses were found for the Aussie against the Kiwi, the Euro, the Pound, and the Swiss. However, we did find gains against the dollar, the loonie, and the yen. So the reason for this is that it did increase the likelihood of an RBA rate cut sooner rather than later. However, I do want to preface this just saying that it is very rare that we see consecutive rate cuts from the RBA. Last time we saw this was in 2020. Obviously, as we know, we were battling the COVID pandemic at the time. So rate cuts obviously were quite necessary. So the consensus right now isn't looking like a rate cut at the meeting next week. Potentially later in the week, maybe as early as August, and one towards the tail end of the year. US GDP came back negative 0.5% versus the negative 0.2%. However, probably against expectations, definitely against my personal expectations, it did actually fail to shake the US stocks, with the Nasdaq and the S&P reaching all-time highs, or actually closing out at all-time highs late last week. The Dow, however, was 2.5% shy of its all-time highs, although it has started off the week pretty strongly. So I guess we'll see how that one tracks over the course of the week if it does challenge that against the all-time high. So next, I want to shift into the US core PCE price index. Anyone who's watched the Monday Open with us before would know that the PCE data is the Fed's main gauge for inflation in the US. So with the data coming out at 0.2% versus the 0.1% expected, it did paint a picture for, it did paint the picture for holding rates at the moment. But where I do think it is quite interesting is that taking this PCE data as well as the data release indicating that personal spending has decreased in the US. So it is highlighting towards a period of stagflation. Following on from this data, though, we did see some heavy selling on the dollar on Friday. Euro USD prices in particular made some notable moves, hitting recent highs on Friday following that release. So in terms of how this does play into future Fed movements, we'll touch on this in the week ahead section just after. Lastly, for the events of last week, I did want to touch on the ceasefire agreement in the Middle East, which was reached. So I wanted to put a spotlight on this one in terms of how it affected commodity prices. In particular, I want to start off with oil. So oil prices did drop just over 12% last week as concerns over supply chains did ease. Interestingly enough, the prices did drop basically back to where it was sitting prior to the conflict starting. And next as well, I did want to look at gold prices. So as many of us would know, anybody who's seen the video as well, have heard me talk about gold prices being a significantly safe haven asset. So because the ceasefire agreement was reached, there was a bit of a risk on sort of sentiment there. So gold prices did drop. It dropped 2.78% week on week to close the week at 3275. All right, so that's good for last week. Now I'll shift into the week ahead. So we'll start off on Monday, I guess later today. We've got the German preliminary CPI month on month. So the reason why I wanted to put a spotlight on this one, obviously being Europe's largest economy, I think the CPI data coming out of Germany will have a big impact on the ECB and future movements. Currently, it is forecasted at 0.2% against the 0.1% previously. So in terms of what I would expect it to move the euro, I don't think it will move the euro too much, obviously, given that it is just one part of the entire European Union. But as I said, being the largest European economy, I would expect that if the data comes in higher than expected, I would expect a stronger euro. Likewise, if it comes back lower than expected, I would expect a little bit of euro weakness. So next on Tuesday, we've got the ECB forum on central banking. Notably, I think this is notable because we're hearing talks from a lot of the central bank heads, that being ECB President Lagarde, Bank of England Governor Bailey, Bank of Japan Governor Ueda, and Fed Chair Powell. So the headline for this one, or I guess the title of this forum, is Adapting to Change Macroeconomic Shifts in Policy Responses. So from my view, what I'm seeing on it is that it's a forum mostly to discuss tariffs and inflation and monetary policy response from their respective banks once the picture is painted a bit clearer. So the expected price reaction on all these. So starting off with the ECB President Lagarde, for the EU, they dropped rates to 2% in their last meeting, and markets are currently expecting further cuts throughout the year, although unlikely at the next meeting. I think based on what is said in this forum, we could start to get a better picture of what the timeline will look like. Looking onto Bank of England Governor Bailey, he's been quite vocal about the fact that he wants to cut rates, and market sentiment right now is expecting 2 more rate cuts over the course of 2025. For the Bank of Japan, Governor Ueda has been pretty firm about wanting to hold their rates at the 0.5% until tariff and trade policy is set. And for the US as well, the last cuts that we've seen from the Fed was in late 2024. So right now they are maintaining a cautious stance until they can fully evaluate the economic landscape and the economic impacts of Trump's tariffs. Right now, they are projected for 2 rate cuts over the course of the year. Coupled in with the PCE data and comments from the Fed, we could see an argument for them to hold rates. But again, I think that's where it comes in quite. I think that's where it comes in quite notable for this event, as we'll get a bit of a picture about the timeline for these future moves. For the US PMI, I won't deep dive too much into this, as I've touched on US inflation in the PCE from the week before. But I did want to put a bit of a spotlight on some US employment data. So, in terms of how this will impact future rate moves, I would expect high unemployment to increase the chance of a rate cut. Maybe not at the next meeting, but maybe the one after that, and as well, lower unemployment rates might incline them to hold their rates. So to bring this back in terms of how this will impact on the US dollar, the lower unemployment would be a good sign of economic health. So we could see a little bit of improvement on the US stocks and potentially on the currency as well. I think, however, in the long term, if the unemployment is high, we probably will see the rate cut drop down, and we might see a weaker US dollar as a result. Lastly, we'll be looking on the Swiss CPI data. So I wanted to look at this in the sense of what is driving the Swiss at the moment. Right now, as we know, it is a traditional safe haven currency, but they did drop their rates to 0.0% at their last meeting. So there has been some strength on the Swiss recently, but I guess based on how the CPI data comes out, we might get an inclination for what they're going to do with their interest rates next, if they are looking to hold them at the 0.0%, if they're looking to hike them, or if they want to drop them even further, if that's even possible. All right, so I think that covers us for this week's section. I'll now shift into the technical section. Let me just share my screen with everyone. Alrighty, so the first market I did to put a spotlight on is a Swiss franc against the Japanese yen. Oh, sorry, since I have some technical issues on there. Awesome. All right, so it started off, I want to look at the Swiss franc against the Japanese yen. We're starting off looking on the weekly. So I'm just going to put a couple lines just on here to paint a bit of a picture of, for what I'm seeing, a bit of a range-bound market dating back to the start of 2024. So what I think is significant is basically where we're sitting now. We have seen the prices break above this previous range-bound market. So I want to look to see, I guess, get an indication of future moves on that. Right now, we are seeing an upward trending market, which is supported by a MACD indicator and our RSI. So I want to shift this into the daily to get a bit of a better picture of what this is looking like. So if we're looking on our Bollinger Bands, it has been pretty consistent in staying in the upper band, for the Bollinger Bands, pretty much dating back to February this year. So it is looking like an upward trending market here, supported by all of our moving averages, as I've just said. But where I'm seeing this as being significant is on our RSI indicator just here. So right now, the RSI line is sitting above 70. So typically when we do see the RSI above 70, it does indicate a bit of an overbought market. So basically what this is telling me is that I'm going to be looking for a price, correction and might angle back down. Historically, when we have seen the RSI break above, we have seen a period of correction where it's dropped, most notably just in April around here, where we did see the prices come down a little bit. So on this one as well, so I'll be still looking to buy into the trend, but I think I'm going to be looking for signals of this to retrace back on itself to find support before I can continue on there. So I'll be shifting into the 4-hourly chart, So what I'm looking at here is rising support price, notably just around here. It has come down a little bit on today. It's trading back towards its moving average. However, going back to the daily, that I'm still seeing it as slightly overbought. So I'm going to be looking for it to come back to find support, ideally above this historically significant price, around the 179. And once it's done that, if it's turning back up, I'll be looking for opportunities to buy. Otherwise, if we are looking to trade sideways for a little bit or diminishing on there, I'll be looking to buy dips. All right, so then shifting into the euro against the Kiwi, I'll start off back again on the weekly chart. So what I'm seeing on here is an upward trending market, particularly dating back to around June last year. I'm seeing a rising support price as well as a rising resistance price, and it's touching on the upper band for the Bollinger Band. So it is indicating to me an upward trending market. If I look into the daily chart just here, though, it can get a little bit of a better picture about what's going on. So obviously around these spikes here, this was around the time of Trump's tariffs coming in. Liberation Day obviously did move the prices a significant amount. So if we obviously take that into consideration, but I'm seeing more of a range bound market, essentially dating back till March this year. So the break above, it didn't look like it had too much momentum on it. So I'm seeing it on the upper Bollinger Band, but it has traded sideways since. So I'm going to be looking for a confirmation to see if the upward trend is still in play right here. So potentially might try find a retracement. If I put a line just around here, so probably on the upper band of this previous range bound market, I would look for probably a retracement around here, see how it interacts with that sort of range there. If it bounces off, it might be a confirmation of an upward trending market, as would also be supported by our MACD. However, for this one, it is trading sideways. So in terms of a risk management strategy for this one, I will be looking to play pretty close stops on these ones. Potentially for any traders who are looking to go into a buy or a sell, I'd probably look to having a close stop, probably around previous swing highs and swing lows. Okay, so that brings us to the end of the technical section here. So for now, we'll shift into the Q&A section just here. So in the Q&A section, I'm just going to be putting a spotlight and answering some of the most commonly asked questions from the clients from the previous week. First question we've got. So why do speeches from the central bank heads move currencies? So as I touched on in the week ahead section, we know we've got a bunch of speeches and forums coming from a bunch of central bank heads. So the question is, why do we need to pay attention to them? Well, typically where I would think the significance comes from this is if they can give us a timeline or an indication of what future rate movements will look like. As we know, interest rates are the key driver for currency moves. So depending on what is said by these central bank heads, if it's looking like they're painting a timeline for like rate moves in the near-term future, we might see price movements as traders start to price in future rate cuts, whether that be weaker currencies, stronger currencies, depending on the direction of their interest rate moves. And now for question 2. So one of the things I do get asked by a lot of questions, particularly those who are new to trading, is what market should I start trading with? So for any of our Vantage account holders, they would know that we've got a lot of different markets in here, ranging from index, currencies, individual stocks, got commodities, ETFs, cryptocurrencies, just to name a few of them. And obviously for a new trader coming in, that's going to look pretty daunting. So the question is, where do I start? From my view, I would think the best place to start is just by getting informed about the market, start having a read of them. Obviously, we've got a bunch of resources offered through Vantage, being our VIP chat room and our private client daily update for anyone who reads it. Get a bit of an idea of which markets are trending, which ones are in the headlines right now. Once you've got a bit of a clearer picture on that, you can start to look into individual markets. Once you've got a market you want to look at, you can start doing a bit of analysis on it from a technical side as well as a fundamental side, potentially identifying trading opportunities in there. But to bring it back to there, I think the best place to start is just by reading the news, find out what piques your interest, and then do a bit of analysis into it. Okay, so that brings us to the end of the video today. Video recording of this one will be on YouTube after we finish the live today, as well as posted in our VIP chat room. For anyone who hasn't checked out the VIP chat room yet, I would highly recommend it. I'm in there all day, every day, along with the other guys in the team. We've also got the VIP chat room manned by a number of analysts from the Everest Fortune group. So anyone who hasn't had the chance to check it out yet, I would highly recommend. If you did want to reach out to me or ask any questions about the markets, get something to be added into the open next week to put a spotlight on, please feel free to reach out to me directly. Otherwise, thank you all very much for joining me today, and I hope you have a good one.